The following are excerpts from Teaching You How to Trade, 108 Lessons. Lesson 7. Some advice for those who lost money while the index gained. Originally written by Master Chan. I'm shifting focus from philosophy to the market today. I've said it before, when it comes to trading, very few people can truly have a meaningful conversation with me. In trading, if you're in, be all in. If not, don't bother. You've got to turn up the heat before the market serves up real opportunities. It's that simple. But I have to admit, the past few months have been frustrating. A certain trader, let's call him Mr. Hesitation, has been pestering me non-stop. He's not managing a huge amount, just a few million, but we have some history, and at his age, pushing 50, I've tried to give him some respect. That said, sometimes I just want to kick him. Back in April, when I positioned myself in warrants, he was too scared to follow. When they skyrocketed, he regretted it. So, I told him to play it safer and just buy bank stocks, like Minsheng Bank around 4 Chinese yuan. He made a few cents and cashed out. No patience. Then, when Air China dropped below its IPO price, I practically handed him a golden ticket, reminding him that the airline's top execs were ex-military. No way they'd let the stock stay below IPO, it's a matter of face. He hesitated for days, finally bought a little, and again, sold way too soon after a small gain. Same story with a real estate play at 3 Chinese yuan, out before 4 Chinese yuan. At this point, I've lost hope. He did manage to hold one Beijing-based stock from 3 to 4 Chinese yuan to 10 Chinese yuan, but he gets nervous at every fluctuation, calling me every time the price moves. I tried teaching him range trading, but he still can't pull the trigger, scared to sell when it's up, scared to buy when it's down. Why bring this up? Because this behavior is way too common among retail traders. Most are like floating weeds, no strategy, no conviction, so, of course, they get slaughtered. And lately, I bet there are plenty who've made money on the index but lost money on their trades. Why are some traders losing in a bull market? Lack of conviction. Lack of understanding market cycles. Before the 1,000-point breakout last year, I wrote, G stocks are at the G-spot. When the market broke out in May, I followed up with, a true bull run never traps you. Yet some traders still manage to lose money. How? They don't trust the bull market and can't read the market's rhythm. Before May, the rally in commodities was just the warm-up phase. Now, with financial stocks leading the charge, we're in phase 1 of the bull market. Look at history. Back in '96, while some stocks had already gone up several times, many others hadn't even started moving. That's how a bull market unfolds. Large caps run first. They set the stage for everything else. This pattern is universal, nothing new. Missed the first wave? Here's how to catch up. If you have decent technical skills, buy into strong stocks on pullbacks. Most retail traders fear dips, but in a bull market, dips are gifts. When the market drops, it's like your rich uncle handing out cash, take it. If you're not great at technical analysis, here's a simple approach. Watch for new stocks breaking above their IPO day highs on strong volume. Look for established stocks breaking above their 200-day moving average, MA, with volume, then pulling back on light volume. Especially watch for stocks where the 200-day MA has flattened and turned up, those are your future runners. Ignore stocks still stuck below their 200-day MA. Wait for them to break above. That's the simplest, most effective way to find true bull stocks in a bull market. For example, look at Bao Steel. It broke above its 200-day MA, pulled back on light volume, for Chinese yuan and 20 cents on October 23, while the MA was at 4 Chinese yuan and 17 cents, then launched again. Today, November 16th, it's over 6 Chinese yuan, a 50% move just like that. Buying on the breakout and pullback was all it took. I usually focus on large caps because small caps don't have enough liquidity for big players. But retail traders can play small caps using the same principles. Just be extra cautious, large caps rarely have fake breakouts, while small caps are full of traps. Retail traders, stop trying to catch tops and bottoms. Seriously, if you could perfectly buy bottoms and sell tops, what would institutions eat? Let trends confirm before jumping in or out, it'll save you a lot of pain. When to sell? If a stock is in a strong uptrend and hasn't even touched the 30-day MA, hold. If you're skilled, trade around your core position, sell high, buy back on dips. But never forget to re-enter unless the chart breaks down. Selling rules depend on the type of rally. Slow, steady grind up. Watch for acceleration, often a sign of a top. Explosive first wave rally. If the second wave shows divergence or excessive volume, get ready to exit. This is like cooking. You can't teach perfect timing, only experience will refine it. And never get emotionally attached to stocks. Stocks are like casual flings, once they've served their purpose, move on. Big money stays in big stocks. If you have real capital, focus on index components. That's where the big money plays. Retail traders chasing random speculative stocks get eaten alive, big players feast on them by the billions. Hunting small retail accounts with a few thousand here and there? Not worth the effort. Every stock will have its moment in a bull market, but the key to outsized gains is mastering the cycle. If the index doubles, and you're not up at least 4-5x, you've wasted the opportunity. The formula is simple. Avoid deep pullbacks. Time sector rotations right. Forget fundamentals. Retail traders don't have the capital to justify deep fundamental research. Fundamentals exist only as a narrative, to boost confidence or mislead others. What matters is what the market believes the fundamentals are. The only rule in this game, win. If you're trading, be ruthless. The market has zero sympathy for losers. There's no cemetery for failed traders, your losses vanish without a trace. No excuses. If you fail, own it, analyze the real reason, and come back stronger. Otherwise, you're just repeating different versions of the same disaster. If you're here, hopefully, you're not just here to read the analects, listen to music, and enjoy casual market commentary. Learn how to make money. Because, let's be real, if you can't even make money, what's the point of talking?
If you're interested in refining your entry points and targeting profit zones effectively, make sure to subscribe for more price action trade breakdowns.